Right now, Bitcoin is in a transition phase and we're about to head in towards a bear market. So in this video, I'm going to be discovering what's going to be happening next for the Bitcoin price. What can we expect in that short, that medium and that longer time frame? I have a lot of different charts and data points actually ready for you guys. So make sure to be watching till the end. And we're also going to be covering Ethereum. We're going to be seeing what's going to be happening for that short-term price action as well. So with that being said, let's not waste any more time. Let's go straight away in towards this banger. Bow. So in this chart, you can see that every time we're in a bear market, you can actually measure out from the top to the bottom the amount of days that actually takes for us to actually reach the point. And you can see that it's very similar every single cycle. It's only around about a year, so it's about 365 days each time. And of course, the bull markets are about 1,065 days each time. And you can see every cycle, it's been repeating the amount of days that we spend in a bull market and a bear market. And of course, we've exceeded the amount for a bull market this time around. So of course, right now, the bull market is likely already over and it's not very possible or very likely we're going to be making new all-time highs. I do think that it is more likely we're going to be entering a downtrend since we've already lost key moving averages, which I'll cover in a second. And of course, we've already shifted some signals. We've already shifted the trend and it's looking like for the next 300 days or so, we're going to be in a downtrend. So looking at this chart, you can see that we have the market maker sell model plotted on the chart. And of course, you can see we have two previous ranges that actually led us towards the upside before we entered the distribution phase. And right now we're actually going in towards the markdown phase where we're going to be having similar ranges as well, but it's going to be leading us towards the downside. So at the minute, we're at a range where we're going to be actually moving towards the downside very shortly. But the question is, are we going to be getting a short relief rally to potentially test key moving averages before we actually move towards the downside? And in my opinion, I do think that will be the case. I do think the 50-week moving average is going to be retested since every cycle we actually retest this 50-week moving average. You can see after 2021, we actually retested the moving average after losing it. And of course, that's why we're leading towards a bear market. That was the same for 2018. You can see that we actually came up after breaking it in 2017 and then we retested the 50-week moving average before moving towards the downside. And in 2014 it was the same thing. We retested the 50-week moving average before moving down. So I do think right now we're going to be testing that moving average before we actually move in towards a bear market. So as of now, we haven't retested it so far, but we can look in towards this resistance level, which lines up nicely with the 50 moving average and 50 exponential moving average bands. And of course that lines up at 102k that we can be retesting if we're going to be retesting those moving averages. And then that's where we're going to be moving towards the downside. But for that short-term price action, we can already observe that we had the Federal Reserve actually cutting rates by 25 basis points already, and we actually rallied in towards that decision. And right now we're already moving towards the downside, just like I've highlighted in my previous videos. So if you were watching, congratulations, because you've already been expecting this short move towards the downside. And of course, it is likely we can continue to move towards the downside, which I'll cover in a second. But we can see the previous two times where we rallied in towards the Federal Reserve actually cutting rates, we actually had a move towards the downside and we continued the downtrend. And at the minute, that's the same thing that's been happening. So that's one reason why we're moving towards the downside. But another reason that we're actually moving towards the downside at the minute is the fact that we have the Bank of Japan having the interest rate decision a week later. So that's this week, Friday, we're going to be having the Bank of Japan actually having a rate decision. And of course, this actually brings the question, are we going to have a carry trade unwind? So essentially, the carry trade unwind involves the fact that Japan was a lending hub offering almost zero interest rates. So of course, global investors actually borrowed out a lot of funds from Japan to actually reinvest into different markets like the US markets and risk assets like Bitcoin. And of course, once Japan actually starts to increase interest rates, this actually makes the cost of borrowing actually more expensive. So of course, this leads to the investors actually pulling out their funds from US markets, so the stock market starts coming down, and of course risk assets like Bitcoin start coming down, whilst investors actually start selling to repay their borrowings at a higher rate. So we can see every time that the Bank of Japan has actually hiked rates, we've moved towards the downside. And of course, we may not actually move towards the downside, minus 32% again. That time round, we actually had the tariffs actually playing into effect, which led to prices coming down extensively. But of course, right now, it is likely we are going to be getting some move towards the downside if we repeat history, and if we actually come towards the downside after the Bank of Japan actually hikes rates. Now, the reason we can expect the Bank of Japan to hike rates is the fact that we have the probabilities extremely high on Polymarket at the minute, and it's at 98% for a 25 basis point increase. So, of course, this is one reason why, of course, it's already priced in the market that we can be seeing a Bank of Japan rate hike, but that doesn't actually knock the fact that we can still come towards the downside off of bearish sentiment and of course off of expectations of a carry trade unwind. Right now, price is telling us that of course this may be priced in, but things are still looking bearish. So I still do expect prices to come down since we actually forming an ascending triangle and we've actually broken towards the downside from it. And right now we're actually retesting it. So it is possible that if we continue to retest this at 91,200, we're likely to actually come towards the downside and actually sweep this low at 80k. But of course, we're still in this bear flag and we haven't broken down from this bear flag formation yet. So it is still possible we can actually move towards the top side, grab the liquidity first, and then we're going to be seeing a price movement towards the downside. So of course, we need to be remaining patient until we get a confirmed break below 87,300. That's where we're going to be moving towards the downside extensively, in my opinion. But as of now, it is possible we can move towards the top of the range before actually coming a little bit lower. Looking at the liquidation heat maps, we can see the same thing where we have a lot of liquidity at 95k. So of course, it is possible we can actually move in towards that 95k region before actually moving down. And of course, in a short-term price action, it could actually look like us actually sweeping the yearly open, which is a key level that we've been rejecting from multiple times. And I do expect people to start getting bullish as soon as we break above the yearly open. And if we do come below it, this is our confirmation that of course, it is likely we're going to be moving towards the downside. And this is when I'm going to be taking a short position and I'm going to be looking for prices to actually come further down. So of course, this is one scenario that I am watching for the up and coming week, especially with the Bank of Japan potentially hiking rates. If we do see price action above the yearly open and then we come back in towards the range, that's going to be a key opportunity to actually take a short position towards the downside. So if you want to be trading for yourself, make sure to be clicking the first link down below for LBank. LBank's offering the community a massive 50% deposit bonus and $100 once you do sign up. And of course, you can be getting a generous refund of up to $5,000. So that's an absolutely amazing deal in my opinion. If you click the first link down below, and you can see you have about 8 days to actually claim this amazing reward. So that's a $100 position voucher, a 50% deposit bonus, and 100% loss protection. If you scroll down, you have all the details here. And of course, you can see if you deposit $5,000, you're going to be getting $2,500 on top. If you deposit $2,500, you're going to be getting $1,250 on top, etc. So you have all the details here if you want to be signing up and of course getting that amazing reward. And if you want to be joining my free community, check out that second link down below. I talk about my position in more detail. I'm going to be talking about what I'm going to be doing here. And if I do take the short position, I'll be alerting it inside the group. So make sure to actually join that if you're interested in market insights, trades, and breaking news. So at the minute, we have USDT dominance at the range highs. And of course, the stochastic is actually already starting to come towards the downside. So we've seen a short move down, which has led to this relief rally that we're seeing in the price action. But of course, if we spend too much time at the range highs, I do expect USDT dominance to actually skyrocket towards the upside. So it may look like something like this where we come a little bit lower, then we actually deviate the yearly open, and then this is where we actually move towards the upside, which will be repeating last cycle where you can see we had a deviation and we started to move below this resistance level, and that's where we hit 3.7% before actually skyrocketing. So I do think that this time around, if we continue to see price action just below this resistance level and we actually come and make a higher low before moving up, we're going to be actually grabbing the upside liquidity, and then we're going to be moving towards the downside extensively where we can see prices go below 70k. So this is one thing to be watching out for the USDT dominance. But of course, if it continues to move towards the downside now and it starts to accelerate down, then we're going to be seeing a bigger bounce in the market, and then that's where actually we may be retesting this 50-week moving average. And of course, that will be looking extremely good, and that will be another opportunity to be taking another short position, you know, if we actually continue the rally and we don't get that confirmation below the yearly open. So of course, the only reason that I'm going to be taking this position is if we can come back below after deviating the highs. If we just deviate the highs and we continue, then of course I'm not going to be taking this position. But in that higher time frame, we can see that the super trend is actually bearish. So of course, downside momentum is to be expected. And on that monthly time frame, we have the MACD actually flipping bearish. And I don't want to be repeating myself every video, but of course I do expect in the coming months we are going to be coming towards the downside. Even if we do see a relief rally in towards the 50-week moving average, I do think that that's going to be leading to some momentum towards the downside. So we'll be coming a lot further down after retesting that 50-week moving average. And of course, we only have about 2 weeks left of December and we're quickly approaching 2026. and every midterm year we typically see double-digit red gains towards the downside, and of course I don't think 2026 is going to be any different. This is why I'm expecting downside momentum, and this is why the title of the video and of course the warning for today is the fact that we're entering a phase and a year where typically we always see downwards price action. So of course I'm not going to be fading this. I do think that we are going to be coming down, and I do think you should be looking at it as an opportunity to actually get Bitcoin more cheap and of course load up for the next bull market, since the most money is actually made in the bear markets where you actually have the opportunity to buy in very cheap. So make sure to be subscribed to the channel, since I will be alerting you guys as soon as we actually get that dip towards the downside, and as soon as I do think we have bottomed out for the cycle, I'll be sniping the exact bottom and I'll be covering it on the channel. As for Ethereum, you can see that we've actually bounced from this support level over here. However, the reaction has been quite weak. We haven't seen extensive moves towards the upside. We've only seen a weak price action, and of course we're actually forming some sort of a bear flag as well. You can view it like this. So it's likely that we can actually continue the move towards the downside if Bitcoin decides to break its bear flag formation down as well. You can actually note as well that we had the Petra upgrade in May of 2025 earlier this year. We had the Fusaka upgrade recently right now, and the reaction has not been the same. You can see we had massive candles towards the upside once we had that Petra upgrade, and we continued price action towards the upside. But at the minute the reaction has been quite weak for Ethereum since that Petra upgrade, and of course you can attribute some of this strength towards the Petra upgrade. So this is one thing to be actually noting. We did see a slight outperformance on that Petra upgrade, breaking this 4-month downtrend, and then we actually started to come down again. So again, Ethereum has not seen an extensive period of outperformance due to this upgrade, and of course I do not expect Ethereum to actually be performing extremely well, since we're heading in towards a midterm year, and typically the returns for Bitcoin in a midterm year is actually quite negative, and I do think Ethereum is going to be the same, and we're going to be moving towards the downside since they're correlated. But of course for that short-term price action, we're holding this 50-week moving average. So until we can break below, we should not be expecting lower prices. I do think that we can come up and grab liquidity as well for Ethereum, and then that's where we're going to be getting that move towards the downside, sweeping the lows. But of course, if we just move towards the downside immediately, then we can be expecting a relief rally if we can reclaim the wick, and then we're going to be moving towards the bull market support band where we can actually top out, which equates to the 50-week moving average for Bitcoin. So that'll be it for me. Make sure to be following me on X to be staying up to date with all my updates, and I'll be seeing you guys in the next one. Have a blessed rest of your day. Peace guys. See ya. Bye bye.